Thank you everyone for joining. We'll get started in about 1 minute, just waiting for everyone to join the webinar room. Thanks. All right, everybody, thanks so much for joining. We'll get the ball rolling. For those who need to step out early, we'll follow up. You'll get a recording of the webinar in case you want to catch the tail end of it. My name is John Pasalis, president here at Realosophy Realty. This is a monthly webinar we do for all of our clients to kind of go through some of the market trends that we're seeing on the ground. And of course, to answer your questions because we get a lot of them. And I get them. So this is a kind of a good platform for us to kind of chat about the market dynamics. Now, I missed, we didn't do a webinar last month, and I feel like the market has completely changed in 2 months. So there's quite a bit to talk about. So I'm going to kind of go through some of the things I think are important to go over and to think about this month. And if anyone has questions, please feel free to post them in the chat. Urmi Desai is with us today from Realosophy. She's our lead content head, manages Move Smartly. So she'll be reading over your questions. She'll be kind of, bringing those up and kind of unpacking them so we can kind of go through your questions and kind of go through some of the market things we're saying. So I'm going to kind of fly through kind of the key topics we're going to chat about. I'm going to talk a little bit about what's going on in the low-rise market, what's going on in the condo market. It's springtime and sales are falling. So why the heck are sales falling in Toronto's housing market? That's not normal. Why are some areas seeing prices drop quickly? I mean, if you've kind of been following the news and the media, we're seeing downward pressure on home prices, especially in some pockets. So why is that happening? What are the things that you can do as a homeowner if you end up buying and selling first in a slowing market? I'm going to chat a little bit about the strategies for that. I mean, we're recommending people maybe think about selling first, but if you do, what are the things you can do? Because this is impacting a lot of people right now who are having a hard time selling their home. So I'm going to chat a little bit, and a lot of mistakes, quite frankly, a lot of listing agents are doing that are actually hurting their clients. And then finally, I'm going to wrap up touching a little bit and looking into a little bit more about what's going on in the low-rise suburban market. In particular, the change in sales and the change in prices that we've been seeing over the past few months or so. I'm going to chat a little bit about the low-rise market. So this is the market for houses in the entire GTA. And this is the number of sales. And you can kind of see in red that sales dropped from March to April. This is not a normal trend. I mean, as I'm looking at these stats, I mean, you're probably looking at the stats for 2020 and 2021, and you're seeing that sales fell in both of those years. But that's also not normal. I mean, they fell in 2020 because of the lockdowns. They fell in 2021 because we had this explosion of demand in the first quarter. And so these patterns aren't normal. The normal pattern for the market is this very light blue pattern, which is 2019, where sales are gradually increasing as you go towards May and June, and then start declining towards the second half of the year. But we're seeing sales decline rapidly, and it's very different this year compared to the previous couple of years. So typically sales are up around 8% between March and April. They're down about 26% just in 1 month. And I'm going to kind of unpack a little bit further why I think that's happening. But for now, we're going to kind of just go through some of the other stats. New listings are still strong, dropping down a little bit. But when we look at the active listings on the market, again, those are increasing quite a bit. We're well above the past 2 years, but below 2019 levels in terms of the number of homes available for sale. But you can kind of see the first 3 months of this year, we're way below where we should be. And now we're starting to see that gap kind of narrow a little bit as more listings hit the market and buyers pull out. Months of inventory generally tells us, what's going on. Let me try to fix my whiteboard here. The months of inventory generally is a very good indicator into both the kind of the speed of the market and which direction the market's kind of trending. The higher the months of inventory, usually the slower the market. But the more important trend here is that when inventory is going from half a month now to 1.7 months, this means that if all the homes, if no more homes got listed, we would basically run out of listings in just under 2 months. It's not quite a buyer's market. Which kind of raises some question. Well, why are prices falling if it's technically still a seller's market? And I'm going to try to unpack some of those dynamics, because a lot of agents even don't get it, that I see on Twitter. They still think this is a seller's market, and it is to some extent, but we're seeing downward pressure on prices. But the most important part is inventory is trending up pretty rapidly. I mean, this is not a gradual increase, which means the market is slowing down rapidly. And this is kind of one of the most important things to think about with these charts. It is the velocity or the rate of change at which inventory is moving. In a market like if we look back in 2019, it was trending down. And forget that little peak in 2020 during the lockdowns. But when you look at this downward trend, this is a market where it's speeding up and the market is heating up and prices are going to rise quickly. When it goes the opposite direction, which is kind of what we saw in 2017, this section is when the market really slowed down and we saw some downward pressure on prices. So this is an important trend we're keeping an eye on, because as inventory increases, typically that's a sign that the market is cooling quite rapidly. And then similarly, I've kind of talked about the price changes. We can kind of see here, average prices for low-rise homes are down about 150,000 literally the past 2 months. They peaked in February. This is the percent of homes selling over asking. So this is also declining over the past 2 months. And then when we look at prices, this is the prices down about 150,000 since February, which is a pretty rapid decline. And I'm going to chat a little bit about what's causing that. But moving on to the condo market, very similar trends, sales declining in the condo market. Listings are quite strong for condos. Active listings, the number of homes available for condos available for sale, is above even the previous 3 years. And similarly, inventory is also trending up here. We can kind of see. So very similar dynamics with the condo market, fewer homes selling for over asking. The only difference is prices have been a little bit more stable for the condominium market. I'm going to chat a little bit about why I think that's happening a little further. So, Urmi, I don't know if you have any questions before we bring Gus on, but Gus, we have Gus Papaioannou from Realosophy who's going to kind of jump on the webinar now, and maybe we're going to chat a little bit about some of the things that he's seeing on the ground.
Yes, we'll hold questions for both of you after. John, are you able to resolve the whiteboard mode?
Oh, is it?
Might be interfering with the view. Yes.
Is that better?
Yes, that's great. Thanks.
Okay, perfect. Awesome. Gus, thanks so much for joining.
Thanks for having me.
Yeah, for sure. So what are some of the things that you've seen kind of on the ground, your listings, your buyers, some of the trends that you've been seeing on the ground?
Yeah, it's definitely slowing. We see it in the numbers. We see it on the ground. We're seeing it talking to buyers. Buyers are on the sidelines, some more anxious than others. But it's important to understand that it really is different neighborhood to neighborhood, area to area. We can't just look at all the headlines and look at Toronto as a whole and use that to say target an area to buy in. Leslieville has less than a month worth of inventory. Certain other areas that I've looked at, Withrow Park, for example, the other day, last week, they had a home that was listed 2 days in, 3 bully offers, sold, well over asking. Another one last night, my client we wanted to go see it together on Monday. They got a bully, and boom, again, they sold way over asking. It really depends on neighborhood to neighborhood. And then there's some, like in Cabbagetown, there was one recently where I thought it was a value buy. They bought it for $1 million, and it was listed at $1.2 million in the heart of Cabbagetown. So it's important for us to look at, yes, months of inventory, not only as a whole, but within the neighborhood. but then also get a better understanding of, what are the better homes that are available within that neighborhood that you're trying to buy. If you can talk to the agent and get any clues as to the intentions of the sellers, the feeling of the sellers. Some agents will give away if their sellers are slightly anxious or not. These are all clues that definitely can help us to get a bit of a value buy when necessary. But it's not always like that. So it really is depending on the home and the neighborhood.
You touched on so many great, I think, topics that I think are worth expanding a bit on. I mean, the first one, of course, is that it's very regional, and you're 100% right that a lot of people who have been reading the headlines, I guess, are missing the fact that a lot of the slowdowns in the suburban market, condos have done a little bit better, and especially urban homes have done the best. Like if you're looking in sort of central Toronto, those homes are still competitive. I mean, like you said, 3 bully offers. I think part of it is the fact that urban homes did not go up 50% the way suburban homes did, so relatively today, they're a better value than the suburban homes, compared to 2 years ago. I think that's certainly one factor. The other point I think you mentioned that is we're talking about, and I think it makes it hard for our clients and for us to navigate, is that there are, like you mentioned, the odd home that sells for, you called it a value buy, which kind of is, effectively saying below what you think they should have gone, right? And this is such a hard market for us, I find, because, and like, why is that happening? Well, some sellers are stubborn and patient and will wait for the right price. Others are desperate and eager and have maybe a listing agent that's freaking them out and panicking and pressuring them to take the first offer, even if it's less than what the home's worth, right? And the challenge is, I mean, we have clients who have to advise them on what sort of the rough value is. And sometimes it's just even approximate. They've seen 3 homes and they make their decisions which one to offer on based on that. And sometimes it's difficult because, some homes, like you said, will look at it and say, okay, that sold for $100,000 less than what we thought it would. And it's like, well, why didn't I bid on that one? Right. But the challenge is that we don't know necessarily all the time. And even though we'll probe, we don't know. And you don't know until you make your offer which seller is going to be eager and anxious. So if you're bidding on the one that you like the most and that seller happens to be stubborn and patient, and then the next night, the one who is anxious sells for $100,000 less, well, yeah, I mean, in some ways we've missed out on an opportunity, but you don't know that until you bid on it. And I think that's one of the challenging things about this market personally, navigating it, obviously, helping our clients navigate it with so many different dynamics going on. And I don't know if you've experienced that or kind of your clients' feedback on seeing some of these low prices. I mean, I've seen it even with some of the feedback we got. It's like, why did this one sell for this price? I mean, and the short answer is, I mean, they were probably anxious, either the agent or the seller, right?
Yeah, I think so. And I've had those exact conversations on both sides. One the other day where a home sold probably $200,000 more than it should have, and I'm still scratching my head. I'm like, the neighbor sold for substantially less a month ago, yeah. and it's the same lot size, and this one had a few more upgrades in parking, but parking and a few upgrades isn't worth $400,000 more than your attached neighbor. So that was a head scratcher. And then, like I said, I have a listing coming up, and we saw a comp in the area sell for a lot less than it should have, and it's like, really, they kind of gave it away. And it really comes down to, there are some sellers that are anxious. Maybe they bought and now they feel they don't have the time, or they don't want to take the risk, which I don't blame them, and they feel the pressure to just, like you said, take the first offer they get.
Yeah, and I think that's the important thing. I think for our clients to understand that when these things happen, I mean, obviously we want to get our clients the best value possible, and this is where sometimes with some sellers, we want to go in sometimes with a lowball offer and not be shy, and that's the flip side. Some buyer agents are very shy to do that, but you don't know which seller is going to be open to that and which seller is going to be eager. So I think the key is to just be patient and try to find the one that might be open to that. Or in some cases, if you get some decent value in the home you like, I mean, that's And that's the challenge. A lot of people, if you're going for the home that you like and the seller's not as desperate, should you skip it and go for the one you don't like as much because maybe he'll save 50 grand? I mean, that's a personal decision, but certainly one of the challenges with navigating this market. Awesome, Gus. I don't know if you had any other stories to share, if we should kind of go on, or anything else kind of jump out?
No, just to touch on really quick for buyers out there. I mean, I just think it's important to really look at, again, inventory per neighborhood, but also, look at we do a little more digging. This is the time when the market was really moving quickly, we couldn't do this, but now we can. And what we need to do is look at, okay, how many showings do they have? How many offers did the last one get? How many showings did the last house on the street get last week?
Mm-hmm.
And really kind of gather some of that to really get an understanding of demand for that specific neighborhood, because it's
Mm-hmm.
different from one to the other. And that will help most buyers going into, let's say, an offer date, to give them an idea of, we're going to be competing with 9 others, which is rare nowadays, but it still happens.
Yeah.
Or it doesn't look like, I don't know. I wouldn't be surprised if, and I've said this to clients, I wouldn't be surprised if they don't even get one offer, which is what you want as a buyer. And that kind of helps you mentally prepare to offer on a house. And it gives you even that little bit of advantage will help.
Yeah, and I like what you said earlier about calling the listing agents, because you're right. A lot of times they'll be very frank with you. If they're panicked and freaking out because they've only got 8 showings and they desperately need to sell, at least the junior agents or the inexperienced ones will be flat out and they'll tell you because they're desperate for an offer. So I think doing that extra legwork right now is certainly helpful and important. Awesome, Gus. Ermi, I don't know if you have any questions or if we should just move on.
A question for you. Thanks, John and Gus, for the on-the-ground insights. So we're getting a sense here that the surprising changes are resulting in some houses going for more than you might expect and some for less. So is it because because the market has started to slow, the comparables that you were looking at only a couple of weeks ago are now not as reliably suggesting what houses and condos might go for?
Oh, that's a good question, actually. I think it's a combination of 2 things. I think you actually raise a good point where, some agents may use older comparables. When I say old, I mean peak February comparables to justify a high price, right? But and some agents do that. But in a slowing market, you shouldn't be doing that, especially in the suburbs where prices have softened, right? So there's different things going on. So in the suburbs where prices have softened 10%, say, you should be looking at the past 3 weeks of sales, right? So that's one factor. But in downtown homes where Gus is talking about, I think it's completely different. It's like you have this really beautiful home that comes on the market and people are behaving the way they normally did. They're looking at Riverdale, they're looking at Leslieville, still getting tons of offers. They bid on their offer night. They don't really care about the value. They love the home. It's unique. They'll spend $100 more than what it's worth. And then even in Riverdale and Leslieville and downtown, you might get that one seller who is on the same offer night as 3 other really nice homes. They get no offers and very few showings, and they're desperate and anxious and sell for less than what they're worth, pure by chance, right? So in the core, I don't even think it's just about comparables. I think it's just like the nice homes sometimes get these crazy prices. The home that isn't as nice as the other ones that have offers the same night don't get as many showings. They freak out, and then they're selling for less than what they should, right? And I think that's what I mean why this is such a hard market to navigate, even as agents, because there's all this different stuff going on. And it's hard to nail. I mean, I don't know what you think, Gus, or if you had anything to add to that, but I think that's kind of some of the dynamics impacting these wild swings in prices.
Yeah, speaking directly for Toronto, definitely. I mean, I think I notice it all the time. I'm consistently tracking homes in the neighborhoods that my clients are looking to buy, and you can see the ones that are photographed right, staged right, really pop off the page. They look like an interior design magazine. They seem to be getting more of the attention of the ones that aren't so pretty. Yet, if you really look at them very closely, it's a lot of furniture and dolled up stuff that make the difference between one or the other, or really good photography. Regarding comps, I actually like to do something that's helpful for me when I'm doing a CMA, a comparable market analysis to figure out the value of a house. when I see the market slowing like this, I'll actually go back. I'll go back to even like December comps and take a wider picture. And I'll do that because, okay, fine, we need to understand that the market was really hot January, February, and that was kind of the peak, but now it's slowing. So maybe prices are coming, not yet, but maybe prices are on the way back to, you know, December prices. So I like to look back to December and kind of see, you know, the truth is usually right in the middle, somewhere between the January, February sales and the December sales, right? So by looking at all of it and narrowing it down, I think it's kind of helpful.
That's awesome. All
Great,
right, Jeremy, I don't know if we had any other.
No.
All right, Gus.
Thanks, Gus.
Thank you.
Thanks so much.
John, just to continue, I know you're going to be drilling down into some of the more of the specifics behind some of these trends. But just to comment on the fact that while this market change looks sudden, you did start to see on the ground slowing earlier this year. And you mentioned in your earlier reports, it was showing up earlier than the data was showing. So now in the data, just to confirm, we're seeing prices down from last month, still holding up year over year, but we are starting to see sales down both from last month and year over year for both houses and condos. So is that, you know, one of the notable shifts that you're really seeing?
Yeah, 100%. And you are right. I mean, we started noticing these trends in February. I wrote about them in my March report. Before they were reflected in sort of the monthly statistics, it was all sort of our anecdotal observations, fewer showings, fewer offers, less traffic, all of these things. These are like the leading indicators, you know, viewings online, how many people are viewing our listings online. And, you know, we're 2 months in and everything we started seeing 2 months ago ended up materializing. I mean, we of course didn't know how quickly, but you're right. We're starting to see these rapid changes in both sales and prices. And, you know, the question, I mean, which kind of sets us up perfectly for this, you know, like why the heck is this happening? You know, why are sales plummeting so quickly as we're moving into the spring market? And, you know, there's really three things I want to touch on. And the most common thing that's in the press right now is that it's interest rates. And my feeling is it's not entirely interest rates yet, because number one, most people who are looking for a home right now probably got pre-approved for a mortgage back in February when 5-year rates, for example, were in the high 2% range. 5-year rates now are probably closer to 4%. So the buyers who are looking right now aren't feeling the higher rates. In fact, they may feel a little bit of pressure to buy before their rate hold expires, right? So I don't think we've felt the impact of higher rates quite yet. I think we're going to feel that more in June, July, when buyers are qualifying at today's higher rates and they don't have the benefit of these low rates from back in February. Now, I think the way higher rates are impacting the market a little bit right now is that some people, you know, even our own clients are looking at rates and they're worried, are prices going to fall in the summer? Should I just wait and see what happens in the market, right? And I think that is certainly pulling a bit of demand out of the market, as some buyers who are a little bit more patient, you know, they're not in a rush to buy, want to wait and see. And you know, that's fine for some of them who are not eager. You know, I don't think the prices are going to take off in the next 2 months. So it's probably not you know, it's not a risky bet. So some people are definitely pulling out of the market. But the other two factors, one was, I think, this idea that COVID and low interest rates pulled a lot of home buying demand forward. People who are planning on buying a home, say in 2022, rushed and bought in 2020 or 2021 because rates were so low. And that's why we had this big demand boom and pushing prices up. But, you know, the idea is after, you know, that boom ends, well, the next wave of buyers are going to be quite a bit lower because we've pulled so much demand forward. There's going to be fewer buyers in the market. So I think this is one of the reasons why demand has been softening. And we saw it softening before all these big interest rate changes back in February. So a combination of just fewer buyers in the market and, you know, the high prices and buyer fatigue is another factor. And then the last factor I'll touch on is increased buyer anxiety from people who need to, I mean, if we think about how a lot of people buy homes in Toronto, they usually buy a home and then they list their current home because it's usually hard to buy and it's usually hard to sell. And we have clients who are looking at buying a home now and saying, holy, what am I supposed to do? I can't buy because I'm worried about selling in a slowing market. And what if I don't get a lot of showings, and what I've had to sell for way less than what my neighbors sold for? So those buyers slash homeowners are getting anxious about actually buying right now, and they don't know what to do because there's so much volatility. So they're hitting pause, many of them. And I don't think they're going to jump back into the market until prices in the market is stabilized, or they just decides to sell first. So there's all of these factors I think are contributing. And we look at the upsize, there's like this third category. They're about like a quarter of the market, of the home buying market. So, you know, all of this has a really big impact. So like I said, I don't think we're going to see how higher rates are impacting the market till the summer. And by Labor Day, we're going to have a much better idea of sort of where the market stands. We're still pretty early. But yeah, so that's generally what's driving the decline in sales. The next question, of course, is why the heck are prices dropping so quickly? Now, you know, when we think about how home prices change, there's this quote I love from Paul Krugman, who's a Nobel Prize winning economist who also writes for the New York Times, who said, you know, this is the way the bubble ends, not with a pop, but with a hiss. Housing prices move much more slowly than stock prices. There are no Black Mondays when prices fall 23% in a day. In fact, prices often keep rising for a while, even after a housing boom goes bust, right? So the question, of course, is, well, why does that happen, and why is it not happening in Toronto? I mean, so why it happens typically is because sellers are usually pretty stubborn in a slowing market. You know, if they're not getting the price that their neighbor got, they're far more patient. They want to wait. There's this thing called loss aversion, where, you know, people are averse to losing money. And basically the idea is if you have to sell your home for less than your neighbor, you see that as a loss. And people's tendency is to just wait to try to get that price rather than lower their price. And, you know, the way this impacts the market is usually over time, inventory increases, and then the desperate sellers sell, and that gradually pushes prices down. But that's not happening now because of how people buy and sell in the GTA. The way people buy and sell in the GTA is they buy first and then they sell their home. But if between buying and listing, the market has slowed down significantly, as it has in Toronto right now, selling isn't as easy as it once was, right? So what's happening is people are buying. A lot of people who bought in February, March, they're going to list their home. Some of them, I mean, shockingly, it's funny. I was talking to a mortgage broker the other day, and he was telling me he was speaking with one of the agents that he works with, and the clients bought a home, and the agent was basically advising them, you know, I think they bought in April, and the agent's like, you know, I think we should not rush to list your home. Let's just wait till the springtime, like mid-May, right? And the mortgage broker's like, I don't want to question the agent. It's like, I had to ask him, like, do you think that's a great idea? Like, the market's slowing down. You don't want to delay listing your home. So some sellers are getting terrible advice from their agents. They're not prepared for the fact that the market has slowed down. So they're listing their home. They're expecting to get 50 showings and 20 offers and sell in a week, but they're getting 10 showings and 1 offer or no offers. And a lot of listing agents don't know how to react to this market. And quite frankly, some of them are panicking, probably pressuring their clients to sell at a much lower price than what they should, rather than understanding the market, being patient. You know, all of our clients who bought a home and had to sell, you know, the original offers they got were below what we expected or we thought was fair. So we had to be patient and wait on the market. And eventually, you know, they sold for a more reasonable price. But sometimes, you know, we're seeing a lot of agents right now also anxious. And a lot of the agents who've been in the market for only 5 years only know a market that goes up. They don't know how to respond when things are slower. So this is what's causing it. The sellers who really needs to sell to be able to afford the home they just bought are taking prices probably below what they should, probably just out of panic and anxiety. And this is why the market's tumbling relatively quickly, because some of those people just feel pressured to sell at any price. And this is actually why prices fell pretty quickly in 2017, almost for the exact same reason. People say it was the foreign buyer tax. I mean, the foreign buyer tax just created the anxiety, but sellers rushed in, buyers pulled out. And that's why prices fell very quickly, because there was a lot of these sellers who needed to sell, right? Now, and this is where I say I think we're not going to know where the market stands until Labor Day, because over the next month or so, these sales will clear the market, right? And then we're going to basically probably have sellers who are not as desperate, sellers who are selling first and then buying, or sellers who who bought but don't need to sell, but are listing their home and are more patient, right? And this is probably one of the reasons why the condo market is doing a little bit better, because a lot of the condo sellers are investors who don't need to sell that condo to buy a home, and they're just selling their condo. So a little bit more patient and less desperate than someone who's locked into a home that they've just purchased. I hope that kind of makes sense. And that's kind of the key factor that's driving the rapid decline we see now. My instinct is it's probably going to stabilize by the summer, but then we might have other factors impacting the summer, like higher interest rates. So who really knows where things are going to go? But those are some of the trends right now that we're seeing on the ground. And like I said, it's impacting some markets more than others, because downtown Leslieville, these urban markets have more demand. So the seller is less pressured to take a low price because they're still getting, in many cases, multiple offers. So, I wanted to talk a little bit about how to sell a home in a slowing market, because it's kind of the market we're in right now. Where a lot of people are, some people are still buying and then listing their current home. And we were starting to advise our clients they may want to think harder about that and if it's the right strategy, because we don't know where the market's going to be in 4 to 6 weeks, and things could slow down further. And we don't want our clients obviously to be in a position where they bought, they need to sell, but they can't sell and are now, defaulting on their purchase, because it's a whole, it's a terrible process to go through. There are a lot of risks, financial risks for doing that. So we obviously don't want our clients to be in that position. We can't predict the market. We can only caution them of these risks. But we did have a lot of clients who did buy, even though we cautioned about the market slowing down, who did buy and then listed. And generally, all of our sales, all of those clients in this position successfully sold. And there are kind of 4 things that are the most important thing to do. The first is, if you're taking that approach, you have to get the order of your steps right, which is you have to prep your home for sale, but as you're looking for your next home. You can't just buy a home and then start your fixing up, your repairs, your painting. Otherwise, you're burning weeks, prepping your home when you should be listing right away. And so the first thing is you have to get your home ready to a state where as soon as you buy, you can be on the market next week, so you're not wasting time, and ensuring you get a very long closing date. The next is understanding the current market conditions, and this is very important. A lot of agents just looking at sales and looking at sale prices. You can't really do that, because, if some agent is looking at a home and their client's home is worth, say, I don't know, $950, and they see the neighbors down the home just listed for $799, and they had an offer date and they sold for $950. An average listing agent is going to look at that and say, see, that we're successful. We should follow the same strategy, list low and set an offer date. But when you pick up the phone and start calling agents for their feedback about how their selling experience was, if I call that listing agent, maybe they're going to tell me they only had 10 showings. They're freaking out. They're lucky they got that one offer. They're lucky that even offer paid $950 because they originally wanted to pay $920, and it gives you a completely different picture of the market, right? So you need to actually pick up the phone and call other agents to see what their showing traffic was like, how many offers did they get, because this is really what gives you an understanding of the market. And as Gus said earlier, it's very regional. You can't just look at newspaper articles. It's even sometimes pockets within a neighborhood are behaving very differently. So you have to really understand the current market dynamics before you list, as this informs your pricing strategy, which kind of goes to the next step about following a more nuanced strategy. It's knowing, do you list low and set an offer date? Do you price higher and be patient? And then, of course, which of those approaches you take also slightly depends on how much time you have. If you kind of have a very short closing, or if you have a long closing, you can list a little bit high and be patient and then reduce if you're not getting the traffic you want. If you have to sell in 2 or 3 weeks, you don't have the luxury of listing high or setting an offer date, because you're burning potentially a week. So your strategy is going to be a function of what's going on in your market, how much time you have. And then finally, the last is having a realistic price expectation. So especially if you're in a market where prices have softened, like in some of the suburbs, you can't expect to get February's prices. That's not going to happen. You got to look at comparables over the past 2 or 3 weeks. That's what's going to set your price. If one person sold way below market value, you don't need to chase them down, because one sale doesn't make a market, but you need to sort of look at the aggregate and be priced realistically. And on the flip side, not be desperate, you know, and this is what we've been seeing in the market, that some sellers are just panicked, desperate, selling within a week for way below what they should, rather than just being patient and waiting for the buyers to come in and sell. So I think we need to have, you know, we need to be prepared if we're buying first and selling in a slowing market to obviously mitigate the risks that a lot of sellers are finding themselves in right now as the market's adjusting. So I'm just going to wrap up by just briefly touching on the low-rise suburban home market. As I kind of mentioned earlier, we've been seeing this decline in the housing market since around early March. So this is a chart showing the number of sales each week. In red, the dark red here is this year, 2022, and we can see that they've been actually declining since March. And again, this is not a typical trend. The light blue, where they're trending up towards the spring, is the more typical one. And again, I like sometimes when the market's shifting, I like looking at weekly statistics because, again, if you, I mean, the March stats are actually a very good example. You know, if you looked at March stats for the whole month, you know, they were up from February to March, but you're missing the fact that for the last 3 weeks, they started trending down, right? So when the market's shifting quickly, this gives us far more insight into some of the dynamics that are impacting what's going on the ground. And then similarly, we can see here the average price for low-rise homes has been declining since then, from around 1.7 to around 1.5 right now. So when we look at the dynamics across municipalities, when we look at the change in sales from March to April, so that's 1 month, usually sales are up 8%. When we look at the suburban market for low-rise homes, they're down anywhere from like 20 to 45%. In Aurora, Richmond Hill's down 40%, you know, and a lot of the other areas are down more than 25, 30%. So big decline in sales in the suburbs. And we look at the change in median house prices, also down anywhere from, you know, 10% to 15% in some areas. And we can kind of see here, you know, Toronto, I've included just as a comparison, you know, prices down about 4% since, and this is since February, I should add, not since March, because February is the peak. So in 2 months, how much have median house prices declined? And again, we don't usually look at month over month because of seasonal differences, but in a slowing market, I mean, Ermi touched on, technically home prices are up year over year, but that's masking the fact that over the past 2 months, they've been trending down. And Toronto has held up a little bit better than some of these other areas. We have to obviously take some of these statistics with a grain of salt because they're just medians and relatively small samples. It doesn't mean every home in, you know, in Milton went down 14%. Again, it's very local. These are just kind of rough measures to give us some ideas into what's going on in the market. So I don't know if we had any additional questions, Ermi.
So thinking or returning back to the question of demand, it seems from your earlier discussion and from your report, which discusses all the details around the topics you discussed, demand right now is falling. You spoke about interest rates, so it seems like there's two buckets here. So in one bucket against is the higher interest rates, the fact that some of the fast tracking of demand happens so that people bought earlier than maybe they thought they would because of the different reasons around the pandemic, wanting more space. And then now as the market starts to change, you have buyer anxiety falling in and increasing. So that's one side. On the other side, people are talking about immigration levels returning as the pandemic seems to start to get under some semblance of control. And, you know, on that side, a lot of commentators have mentioned that they feel confident. And you've spoken a lot about how Canada's immigration levels overall have contributed to the very high home prices we've seen. So I'm wondering if you can weigh these buckets, and I know there's many more factors. How do you think about these factors in the short, medium, long term?
Yeah, I mean, that's a great question. And certainly a lot of the factors I think we're seeing right now are short-term changes. You know, I think long-term, most Torontonians are kind of bullish and optimistic about housing for all of the fundamental reasons you've talked about. So, you know, we're just adjusting to some of these big changes in the economy right now. And this is, I think, where we don't know where things are going to happen. I mean, I think in one of our sales meetings, I think, you know, May Chan had mentioned, you know, maybe by fall, we're going to see buyers jump into the market again because they're seeing a little bit more value. And this is where we don't know, right? Like, it's so impossible to predict. And she's 100% correct because, I mean, what she's arguing could be correct because the buyers have not disappeared. Like, the people still need homes, right? People have just moved to the sidelines, right? And if the market stabilizes by the summer, I mean, I'm not suggesting we're going to see 20% price growth, but we could end up seeing a more stable market in the fall, right? As buyers see a little bit more value, and we're seeing this with our clients already. And clients whose budgets, for example, were like $900,000, who couldn't find a 3-bedroom family home anywhere in the GTA, are suddenly able to find one, right? And this is the important question. If you're that family, it's like, okay, do you jump on it now? And maybe you get more value. Obviously, you're getting a little bit more value than if you bought, 2 months ago. Or do you just like sit and wait, and rent for a year and hope things are cheaper a year from now? I mean, I don't know if I would do that. I think the idea is, I think a lot of people are finding a little bit more value. I think, and even some of our clients, like, they know that if they buy in the summer or February, like possibly, or in the fall, maybe prices drop another 10%. But at the end of the day, it's like, to your point, I think most of the people, they need a home. They're buying for the long term. They're not, I think, as concerned about what happens in the next month or so, or 3 months. They're more kind of looking long term, right? And I think that's the key thing in this market. Like, if you can get a little bit of value or find that unique home that was harder to find 2 months ago, and you're buying for the long term, I mean, I personally, and I this is the way I buy. I mean, I don't worry so much about what's going to happen next month because you can't predict these things. I mean, it's, if you're getting a decent value today based on even sales prices a few months ago, I agree with you. Most people tend to think the market's going to recover eventually. We just don't know what eventually is and at what point. But there are still these, fundamental things that have been driving home prices up. Like, we're not building enough specifically low-rise family homes relative to our population growth. So we'll have to see how the market responds long term. But I agree with you. I think these are short-term dynamics that we're going to have to keep a close eye on.
Yes, and also to add to what you're saying, anecdotally, we're also hearing on the condo sector, where you mentioned investor behavior is a little bit different, that some are starting to respond positively to seeing rents rebound. Can you talk a little bit about that?
Yeah, listen, I think it's an interesting market because, in theory, when we think about the markets that are vulnerable, usually it's the investor driven. The areas that have a lot of investors are usually ones that might see prices fall. And some investors are exiting out of the condo market, but a lot of them are still optimistic for all of the same reasons we just talked about. Like, rents are doing very well. When the market slows down, people move to the rental market if they're not buying a home, which is pushing rent prices up. Rents are unbelievably competitive. And again, I think this goes back to this idea that I think long-term, most people are optimistic about Toronto housing and Toronto real estate. And in some investors, some investors certainly are selling a little bit, maybe take some money off the table. But the ones that have been in this for a long time, I mean, I wouldn't sell anything right now. I mean, I'm not selling anything right now. Most are generally long-term optimistic. And I do think, you're going to hear different stories based on different people's investment goals and anxieties or outlooks. But I do think there are a lot of investors out there who are still optimistic. And even I mean, I tweeted the other day, I mean, as buyers are rushing, I think I tweeted as buyers are rushing out, investors are starting to get warmed up. And there's a lot of truth to that. I mean, I've been getting calls from people who are thinking, maybe if the market cools, maybe it's the right time for me to buy another property. So you're going to have different people behaving slightly differently, but definitely there's still going to be a bit of demand from investors.
Great. So to close, actually, you just touched on one of the questions I'm hearing from both clients and our readers at Move Smartly, which is this idea of whether they should sit back and wait and see. I think most of us will.
Oh, are you on mute? So, I mean, I'll jump in and kind of, Ermi, I think we lost you there. You're on mute. But this idea of should we wait and see, or should we jump into the market? Again, I think that's a very personal question. I mean, if someone's doesn't need to urgently buy a home right now, I wouldn't panic. I mean, at the end of the day, I don't, like I said, I don't, and I've had lots of people ask me this, lots of our clients. I mean, should I wait till the summer? Should I wait till the fall? I don't advocate necessarily waiting, because I think a lot of it is, I mean, you know, part of it is the type of home that you want, right? So if the right home comes up and it hits a lot of check boxes, you don't know if that home is going to hit the market 4 months from now, right? So I don't advocate waiting, but I also would not advocate rushing and panicking, because I don't think prices are going to explode over the next 2-3 months. If anything, they may plateau. They may soften a little bit. So I don't think buyers should rush and panic, but I also don't advocate trying to time the bottom of the market. It's impossible to do that. I mean, no one knows when the market's going to rebound or plateau or whatever. Like I said, I think if you're able to get a little bit of value today, and, you know, and that is, you know, either value, meaning you're getting it below market value, almost pricing in a discount, which is what we've done with some of our clients, which is what we were doing in 2017, or possibly like some of our clients who just found this unique home at a lower price than what it sold for in February, and not necessarily getting a crazy deal. You know, would I buy? I mean, I would. I think I did this video about how I tried to, you know, bid on a house in 2017 because it was unique for those reasons. So I don't advocate trying to time the market. You know, I think our clients should be patient. I think they should try to get some value or wait for the unique home. I don't think they need to worry about prices rebounding over the next 2-3 months. I would not advocate personally. I mean, if I needed to buy a home and my option was either buy now because I need something or rent for a year, I don't know if I would rent for a year, because who knows where the market's going to be a year from now. But again, that's just personal. I mean, it's impossible to predict. But I think those are kind of the right way to approach it. And like I said, if prices soften 10%, you know, at the end of the day, if you're buying long term, I think most people are buying their homes for 5 to 10 years. You're probably going to do pretty well. So I don't know if you're still there, Ermi, or awesome. So I think we'll wrap up, because I think Ermi's having issues with her audio. Thank you all for joining. If you caught the webinar a little bit late, you'll be getting an email. You can with a recording of it. You can let me see if there's any Q&A. Okay. You can kind of watch the videos after. If you have any questions, feel free to send me an email, john@realosophy.com, anytime. And happy to jump on a call and have a chat as well if you have any questions. Thank you all for joining again today, and we'll see you next month.